Hey, what's up guys? Welcome back. I'm simply Brani right back. So today you're going to learn how to trade engulfing bars. And again, you're going to learn how to spot opportunities in different market conditions. So make sure you subscribe down and hit the like button. Hey traders, today I want to talk about bearish engulfing bars and how to spot them in different market conditions. Alright, let's dive in. During a range market, put your eyes between the tops and the bottoms. Like for example, if you can check well, this is a range market. We are having a rejection here. There's no bearish engulfing. Here we didn't see any bullish engulfing stop spotting, which means our eyes should be at the top of the range. We are having this one here. We are having this bearish engulfing. You get, most of the time when people spot a bearish engulfing like this, they normally enter and put their stop loss anywhere. Let me tell you something, just in case if you spot bearish engulfing at the resistance of the market structure, let's say if you entered somewhere like here, your stop loss should be at least up at the top of that engulfing. You get, that is the most important thing, aiming 1 to 2%. You get, so that is it. For example, if you realize it well, we are having here so a very nice support, but we want to see what is taking place around these areas. So we don't normally go in for sales, and this is one of the most trusted candlestick patterns that I do trust most of the time, like bearish or bullish engulfing candlestick pattern. We see we are spotting it right here, very nice one. And yes, so this is where we get our entry exactly, and the stop loss should be just up here. You get, stop loss should be up there, aiming 1 to 2. You get, so which means if we are trading a range market, our eyes should be at the top of the range or at the bottom of the range. Meanwhile, we buy at the bottom and we sell at the ceiling, which is the top of the range. But we don't normally usually just sell. We should spot that bearish engulfing candlestick, one of the powerful candlestick that I trust. As I told you in the previous video, that we don't normally trade the candlestick, just we trade what the candlestick represents. You get, bearish engulfing, it represents the sellers that are being stepping in the market. That's why you see here buyers and sellers in place when the market went to the ceiling of the price, then sellers stepped in the market, which means there was some orders around this level which they were just picking up, and boom, we dropped down. So don't mind about the drawdown, so long as the stop loss, it is in a right place. That is the most important thing. All right, another entry for the engulfing bars, it is where we are facing some kind of no, let me use this, where we get some kind of a break of the range. Let's say if the market has been playing around this level like this, 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 this. Now at the break of the range, for the retest, if we get some kind of engulfing bar, it's most of the time people, they do go in for a sales from here without any conference or with just a rejection. But trust me, you will never go wrong while trusting engulfing bars, because if you spot some kind of engulfing bars here, this is another type of entry to trust your market setup. This is another trusted entry. Let's go to the charts and see whether we can spot one where we are having a range in the market structure and some kind of engulfing break, another support here, isn't it? We are having this support here. So we see the market trying to do what? We see the market trying to range. You see, trying to range, which means sellers and buyers are already in place. So which means your eyes are on a break, you're waiting for a break. You can see once you get to learn the pure price action, these are the fake outs that you're gonna avoid, whereby the market, jumped in, bounced back for a retest. So normally people who doesn't know real pure price action, they will completely jump in for a buy, and knowing that this is a retest, but they will get lost. They will just get smoked. So if you realize it well now, the market went inside, which means here you're waiting for a break to the downside and a retest so that you can sell, or a break to the upside. Then we tend to see another break around here, up break, a retest. Now this retest, you can see you can see the engulfing bar. So this is when you go in for buy, same entry, and you put your stop loss just below the engulfing. You get, so you target the highs of the day maybe, or you target another key zone, of which you can see we are having this area of resistance, and we are having another area of resistance here. So this is where you target your area like this. So this is one way, another entry of engulfing bars, which is a very nice risk to reward. So you can see you will not get trapped by this fake out, whereby we are in a range, and you get some kind of a fake out to the downside, a retest. There is nothing, something like engulfing, a bearish engulfing to show you that we are continuing to the downside. The market went up, went down, no confirmation till you wait your setup. Actually, this is why most of people they lose, and the most people make money, because pro traders, they do wait for the market to come to their zone, and they do wait for a proper confirmation before executing any trade. But for a retail trader, like any other beginner trader, once you spot some kind of a breakout to the upside, then you wait for a candlestick. You be like, maybe this candlestick, it may start from here and go up, or you wait for that drop. As soon as you as soon as you see, for example, when the market it is dropping down, there are some times where candlestick can make some green, can form into green before dropping down. You get now for you, you don't wait for the candlestick to close. That's when you get stopped out, and you be like, man, you get. So then another thing is that one of my students asked me, like, I learned a lot about price action, but I don't normally get the targets. I don't know where to set the targets. Let me give you a trick. Let's say if you go in for a sell like here, and you enter at your close engulfing bar here, and you must put your stop loss up above your engulfing bar. Then for the next take profit, it should be the next. It should be at the next 1 hour support. You get, for example, you can see we got at this resistance here, then we got a very nice bearish engulfing, isn't it? Which means if we went in for sell, the next, where is the next support? 1H support, it's here, which means this could be the real take profit, which is a very nice risk reward. For example, if we are trading a ranging market like this, and you're waiting for a break and a retest, this is when you wait for your trade, to indicate the engulfing bar, or to form your entry confirmation. You go in for buy, then your next target, it should be at the 1H resistance, of which you can see it's here. You get, don't be greedy, don't try to be greedy, don't try to get FOMO. FOMO, it's when you're scared of missing and all of those stuff. Just be cool, wait for the market to come to your zone. That is the most important thing. Starting next week, I'm going to trade this 100k account live with you guys. I hope you like down. I hope you subscribe, guys, for more content. All right, wish you a blessed new day.